Good morning. It's Jeffrey Christian of CPM Group. It's 9:55 here on Tuesday morning in New York on the 9th of September. I want to talk about silver inventories and where exactly they're declining. I hear that they're being wiped out, and I'm not quite sure where. First, I'll talk about the markets. And before I do that, I want to point out something. CPM Group, the purpose of us posting these videos twice a week is not to provide CPM Group's price projections free of charge to the general public. We're a corporation, and our intellectual property is what we sell, and that includes our data, our statistics, our knowledge of these markets, and our supply, demand, and price projections across commodities. So the purpose that we have in doing this, there are several purposes that we have. One, and I've written them down so I can remember, is to provide accurate information about precious metals and commodities markets, to help investors understand the markets better, to memorialize market information and intelligence and history that we have for a broader group of people than just the CPM Group, to counter misinformation and disinformation and marketing hype, and to help investors avoid investing from positions of ignorance of fact or lack of logical thinking or being deluded by others or being self-deluded and those other sins of the intellect. So we do tell you where we think markets are going, but that's not what we're here for. If you want our specific and explicit and ongoing price projections, you need to become a client, right? Now, that said, I pointed out a few weeks ago that in our early August precious metals advisory, we thought that we had projected that the price of gold would go to $3,600 in August and $3,700 in September or October. And in our September precious metals advisory, which came out last week, we said that we thought it would get to $3,700 this month, as we had said last month, and that it would probably get to $3,800 in October or November. So those are some pretty explicit price projections. Don't say anything about where the price might come back to in the interim. We do expect the volatility to continue. So here's your gold price. And yes, today it broke above $3,700. It got up as high as $3,701, 20 minutes ago. When I looked at it just before we pressed record, it was down to 3,700. But that's where we're at today. And our expectation is that the price is going to continue to rise due to the gathering political and economic storms, which are quite clear. There could be pulls back from time. It now looks as though the Fed will decrease its interest rates next week at the FOMC meeting, and that could further stimulate higher prices. We have PPI and CPI coming out this week. If they're stronger than the market consensus expects, that could lead to a little bit of a dip in the gold price. But quite frankly, a $200 decline takes us back to where we were 2 weeks ago, 3,500. So we wouldn't be surprised to see very volatile markets. We wouldn't be surprised to see profit taking at some point. October is an active month. It's not that active. The real open interest is in the December COMEX right now. Investors are expecting the gold price to rise further longer. Silver, very similar situation, a little bit weaker. It's $41.75 20 minutes ago. And again, we do think that the price of silver will continue to rise. The September roll into the December futures contract is well behind the market right now. That opens up the scope for the price to decline $40 is the obvious support level, but quite frankly, a drop all the way back to 36, 37, or 38 would still be in line with a sharp upward trend. So volatile markets with an upward bias. Platinum and palladium. Platinum rose. Oh, this is a silver price from a longer term perspective to show you how the price was trading between $3.50 and $5.50 from 1990 into around 2005, 2006. It started to rise after that. It got up to $49.85 or so briefly in April of 2011, and came back down to about $14 for most of the period from 2015 through 2019. A little spike down when we got into the COVID lockdown, but it started rising really in the middle of 2019 and continued to rise into 2020. 2021 saw the rise of the scandals, the frauds, what were they called? Wall Street Silver and the silver squeeze and drain the COMEX and all that garbage. That kept the silver price high in 2021. By 2022, I think a lot of investors realized those were just scams. The price came off to about $18, and it's been rising ever since. But hope springs eternal among the deluded. We tend to have a more rational, fact-based view of the world. Platinum prices spiked up. They've come off a little bit. They spiked back up earlier this week to $1,390 late last week, early this week. Our expectation is still that they'll drift lower, although October is an active traded month on the NYMEX. And palladium prices did not really see much of a spike up late last week, and they are moving back down into that range that we saw prices trade in from late 2023 into June of this year. So let's go into silver inventories. And we've talked a lot about this over the last few weeks, which has stimulated commentary in our YouTube video postings. And ChrisBot666, let's just call him Satan. That seems to be what he wants to be called. Posted this: Jeff, the paper charade is coming to an end, my friend. First off, you're not my friend. I don't know you. You hide behind this. You can't even give your name in public. You're not my friend. But if you believe that the paper charade exists, you are demonstrating a fundamental lack of understanding of all financial markets, including silver. But that's not the important part. The important part is it's totally fine to disagree based on facts. Healthy debate is what makes markets interesting. But let's have an honest discussion about the real state of silver supply. That's a very interesting one. I saw Neil deGrasse Tyson speak, and he was saying, I'd love to debate intelligent people who have different views, but I won't waste time debating people who don't have intelligent alternative views. But Satan goes on, even longtime silver allies like Philip Baker at the Silver Institute are being remarkably candid. He's saying inventories are getting wiped out faster than he's ever seen in his entire career. Well, I have the greatest respect for Philip. When he took over at Hecla was transformed from a company that was suffering under his previous management, and he did a remarkable job. And he's a very honorable person. I have known Hecla since the late 1970s through two previous CEOs and presidents with whom I didn't have a lot of great respect. One of them was a fellow named Art Brown, who famously was the head of the Silver Institute in the early 1990s, and issued a press release in which Art said, and I quote, "The silver price, which was trading around $3.50, $5.50 at the time, the silver price is being artificially suppressed by the belief that there are tremendous inventories holding down the price. So the Silver Institute is going to commission a study on silver stocks to show the world that there's not a lot of silver around, and then the price will rise sharply. Now, at the time, CPM Group had created for the Silver Institute the World Silver Survey, and we were running it with a contract that said we had editorial control, so that if we were less bullish than the Silver Institute would have liked us to be, which was the case, didn't matter. That's what we wrote. So they came to us and said, do you want to do this silver stock study? And we said, no. Art's told the public that you already have the conclusion that the silver inventories aren't there, and that the price will rise once you issue the study. So you don't need a real research company. You have to understand, in 1991, CPM Group was the only company in the world that was pulling together fundamental supply, demand, inventory, investor demand, stock data on silver and gold and platinum group metals. I stand corrected. There was a company that was doing gold research. There was a different company that was doing platinum research. But for silver, it was just CPM Group. And we had developed all of this data starting in the late 60s, early 70s, and kept it going. So when the Silver Institute said, okay, well, we'll find somebody else to do it, they found 5 or 6 companies that said they would do a study. I remember that one of the generalist research companies in California said that they would do it for $1 million, but they would have to use CPM Group data because that was the only data that was around. And in fact, 5 of the 6 companies that bid for it, for that contract to do that study, said we'll have to use CPM Group data. This is the study. I've shown you pictures before. It was done by CRA, Charles Rivers Associates research company, and it used CPM Group's data. That was Art Brown. Phil Baker never did anything like that. And, it's interesting because people get involved with the Silver Institute or the World Gold Council or the World Platinum Investment Council, and they feel they have to be bullish. I used to have a fabulous relationship with Pierre Lassonde. I do again now. I haven't seen him in a while because he's older and he's removed himself from the day-to-day operations of Franco-Nevada. But in the 80s and 90s into the aughties, we had a very good relationship, and Franco-Nevada was our client. Okay? But in 2002, Pierre engineered a merger of Franco-Nevada, Newmont Mining, and Normandy Mining. All 3 companies were clients of CPM Group, and he engineered this creation, this merger, 3-way merger, which made the largest gold mining company in the world. And the next thing I knew, Pierre was saying that the gold price would go to $10,000 very soon because of a financial crisis. This was in 2002. Yeah, and the price of gold was $300, $320, $350. But it was going to go to $10,000. And that was, 23 years ago. And you still hear people saying it's going to go to $10,000 very soon. So there's this view that you have to toe the line. And, Philip said what the Silver Institute said. Inventories are getting it wiped out faster than he's ever seen in his entire career. Let's take a look at that. This is CPM Group's half of that honest discussion. COMEX inventories, around 500 million ounces right now, are 5 times what they were in the past. If you go way back into the 1980s, they had about 250 million ounces, so it's only double what it was back then. But for most of the period of time from the 1990s until 2017, 2018, it was 120 million ounces. We're 5 times that now in New York depositories. Not getting wiped out there. Let's look at London's a little bit trickier because data was only published beginning in 2016, right? In July of 2016, the London Bullion Bank started a program through the LBMA to have the depositories in London report stuff. And there was about 950 million ounces that they reported in LBMA registered and recognized depositories within within central London, within the outer belt of London. So it excluded anything that was outside of the outer belt of London, excluded the stuff up further north in the United Kingdom, which is one of the reasons why when Berkshire Hathaway bought 129 million ounces of silver in the London market, not in the COMEX, by the way, in the London market, they took it out of those depositories and moved it outside of London to a depository that was not in the central market. They didn't want the London bullion banks necessarily to know what they were doing with their silver. So inventories are only available since 2016 on a reported official basis. Prior to that, back in the 90s and aughties, they were much lower. And we thought they were about a 250 million ounces, maybe 350, 400 million ounces at times over those 2 decades, right? The Silver Institute, when we left the World Silver Survey, they hired Goldfields Mineral Services to take over the World Silver Survey. They had never done any silver research, so initially they were using our data for the historic stuff. They still are basically our data prior to, say, 1994 or so. They estimated that European inventories were around 200 million ounces in 1994. They took over the World Silver Survey in 1995. 200 million ounces throughout Europe, including the Swiss inventories and the German stocks. Gruesomely underestimating what was in Switzerland and Germany, and also apparently underestimating a little bit what was in London. But if you have to take into account that while inventories spiked higher during the pandemic or prior to the pandemic and were over 1.1 billion ounces in London, they came off after we got out of the pandemic and we got into a global economic recovery, fell to 850, then to 711 earlier this year, and they're about 780 million ounces now. But you have to take a longer term view where you have to rely on industry estimates of unreported inventories, which were maybe a third of what they are today. So while London inventories are down from their pandemic levels, they're probably triple what they were 30 years ago. Shanghai only began reporting inventories in 2012, the Shanghai Futures exchange, and they'd gone from zero unreported in prior to 2012 to about 40 million ounces. But there are dozens of silver depositories that are well known in the silver market, spread throughout China, that do not report their holdings to the Shanghai Futures Exchange. So they've got about 40 million ounces. Yeah, it's down from 80 million ounces during the pandemic, but still not running out, not being wiped out. Now, silver coin inventories actually are silver bullion. These are silver bullion coins, and they're 2.5 billion ounces in bullion form, refined bullion form. Just melt them down and use them if you need them. And it's really strange that silver marketing groups try to stimulate silver investment demand by saying that you would not see rising investor silver holdings as a good thing, and suggest that these inventories are somehow or other inconsequential to the silver market. This isn't silver that's been used and transformed into jewelry or electronic goods or batteries that don't actually exist in the commercial market right now, or batteries that do exist in the commercial market. This is silver that's held in refined bullion form. The day it's sold, it could be melted down. A lot of these coins don't get melted down. The medallions, the things that are not official coins, they get melted down. But if it's an official coin, and these are official coins, not medallions, if it's an official coin that's been struck and sold by the U.S. Mint or the Royal Canadian Mint or the Perth Mint or the Austrian Mint or the China Mint, that stuff tends not to get melted down immediately because it has a premium to bullion. But if you did have a real shortage of bullion bars, that stuff's available and it can be used the day after it's sold. ETFs, 1 billion ounces of silver, more than 1 billion ounces of silver. And yet marketing groups seem to try to stimulate investor buying by belittling the 1 billion ounces that are stored in bullion bar form and have built up since 2006. Like they see investor silver holdings as not necessarily a good thing. And they, I guess, would rather have those inventories not counted as refined bullion. And they'd rather have governments instead of individuals owning and holding silver inventories. Kind of strange. You put it all together, and you've got about 6.4 billion ounces of silver in refined bullion, bars, and coin form worldwide. Now, we have always pointed out that the existence of these inventories in 1980, when the price spiked from $5 to $50, in the early '80s, when the price spiked from $5 to nearly $50, and today, we've always pointed out that the existence of these inventories do not preclude higher prices, at least on a temporary basis. And you see that when the price spikes higher, a small portion, 100 million ounces, 200 million ounces, gets sold by investors to take advantage of the higher price, which is one of the reasons why the silver price came off from $50 to $16 in the first 4 months of 1980, and from $50 to $16 between 2011 and 2015. These things happen. Legitimate metal. Now, the yellow part is CPM Group's estimates of implied unreported bullion inventories. And that includes those medallions, because we don't include medallions as coins. And you have seen that decline, Unreported bullion inventories are around 2.5 billion ounces this year, according to our estimates. That's down from 4.8 billion ounces at a peak in 1988. But most of that represents a shift from unreported inventories to reported inventories, to ETFs, to coinage, which we can measure because the national mints actually tell us how much, and also the 750 million ounces that's now reported to be in London that used to not be reported. So that was, if you go back to 1988, a couple 100 million ounces, 2 to 4 million, 100 million ounces of that 4.8 was in London vaults, but it was not reported. And there's a lot of silver in Switzerland too that's not reported. We had the data on that, but I didn't include it here. So, unreported bullion inventories are down over the last 40 years. Total inventories are at record levels. They're not being wiped out. 6.5 billion ounces. Right? So there you have it. And then this is a chart from our Silver Yearbook, which shows the cumulative mine production estimated to be about 60 billion ounces over the history of mankind. We have about a 6 billion ounce number that we start with several hundred years ago, 1500. Since that time, most of the stuff has been well measured by governments and others. So it's relatively good. You'd say, well, 60 billion, how do you know that it's really true? Okay, let's say that we just take that 6 billion out. We only have 54 billion ounces. And a lot of it's identifiable in bullion form, coin form, and a lot of it is in jewelry and decorative objects. So, going back to Satan, yeah, let's have a healthy, honest discussion about the real state of silver supply. If inventories are getting wiped out, where's that happening? CPM Group has repeatedly shown the evidence of rising inventories. We've done our half of that honest discussion. I just showed it to you. Let the other side show where the inventories are plunging to dangerously low levels. We'd love to see the data. We'd love to see the evidence. I've just run through this litany here. COMEX stocks, 5 times what they were. London inventories, 3 times what they were 30 years ago. Coin inventories at record levels didn't exist until the mid-1980s. Chinese inventories, higher than ever before. Indian inventories, I didn't show you data, but there are billions of ounces of silver held by Indian individuals and others and temples in India. And Indian market inventories are pretty much at record levels too. Depository companies around the world are building new silver depositories as fast as they can in order to hold all of the bullion and coins that people want them to store. That's not a sign of inventories being wiped out. If you go back to the 80s or 90s, when there was a period of time when people were getting out of the bullion market, you saw depositories being closed. Most of those depositories have been reopened since then, and they had adjunct depositories that have doubled, tripled, quadrupled, quintupled their ability to store silver. So that's our side of the debate, that honest discussion. Let's have that honest discussion. Let's see the other half of the debate. That's our contribution to the discussion. Satan and everybody else who thinks that the metals are being wiped out. Now, my favorite quote, every man has a right to his opinion, but no man has a right to be wrong in his facts. You can believe whatever you want, but try to base your belief on knowledge and information. I have a couple other quotes that I like. The True Believer. Eric Hoffer wrote the book, The True Believer, in the late 40s. And he said, for a true believer, to rely on the evidence of the senses or of reason is heresy or treason, right? I mean, a belief is based on a belief. If you're trying to base your belief on evidence and what you see in the world and what you know, that's not a belief, that's a knowledge. A fanatic cannot be weaned away from his cause by appeal to his reason. And John Maynard Keynes, somebody complained that he changed his views. That's a problem with economists. You guys are changing your views. When the facts change, I change my mind. What do you do? So that's our contribution to that honest discussion. Satan, you can go off and collect the other side. Now, I'll be traveling starting today for 2 weeks with a heavy meeting schedule. And I will try to produce videos on Friday of this week and next Tuesday and next Friday, but the technology and scheduling may preclude it. So you may not hear from us for a week and a half now, or you may. It's hard to say. In the meantime, you can go to our website. You can buy our gold yearbook, our silver yearbook, our platinum yearbook. The silver yearbook has a lot of the data. I just ran through it, but it's also here. If you want our monthly and our quarterly and our price projections for the next 2 years, you can subscribe to the Precious Metals Advisory. There's information about it on our website. You can buy a single copy and see what it's all about. And then if you like it, you can say, okay, I'd like to buy an annual subscription to that. There's other research that you can acquire. There's a lot of free reads. And you can always send us information at info@cpmgroup.com and say, let's talk about ways you can help me invest more intelligently and avoid investing on misinformation, lack of information, bad judgment, bad logic, and delusion. Take care of yourself. Take care of those around you. Try to do something good for the world. And we'll be talking to you soon.